Ladies and gentlemen, good day and welcome to Vimta Labs Limited Q2 FY25 conference call hosted by Systematix Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference call is being recorded. I now hand the conference over to Mr. Vishal Manchanda from Systematix Institutional Equities. Over to you, sir.
Thank you, Siddhant. Good afternoon, everyone. On behalf of Systematix Institutional Equities, I welcome you to the Q2 FY25 earnings call of Vimta Labs. We thank the Vimta Labs management for giving us an opportunity to host the call. Today, we have with us the senior management of the company, represented by Ms. Harita Vasireddy, Managing Director, Mr. Satya Srinivas Neerukonda, Executive Director, Mr. Narai Naidu, Chief Financial Officer, and Ms. Sujani Vasireddy, Company Secretary. I'll now hand over the call to the company management for opening remarks. Over to you.
Thank you, Vishal. Good afternoon and a very warm welcome to our Q2 FY25 earnings call. Our investor presentation and the financial results are available on the company website and on the stock exchanges. Please note that anything said on this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks which the company faces. The conference call is being recorded and the transcript along with the audio of the same will be made available on the website of the company as well as on the stock exchanges. Please also note that the audio of the conference call is the corporate material of Vimta Labs Limited and cannot be copied, rebroadcasted or attributed in the press or media without specific or written consent of the company. Now I would request our Managing Director, Ms. Harita Vasireddy, to provide you with the updates on the quarter September 2024 financial results.
Thank you. Good afternoon, everyone. Thank you for joining our Q2 and H1 financial year 25 earnings call. The first half of the financial year 2025 was good according to the market response and the way we have delivered our services. The Indian economy demonstrated positive movement with growth driven by robust domestic demand, infrastructure spending and government-led initiatives. The manufacturing sector saw substantial growth buoyed by increased exports and the success of the PLI scheme. Service sectors such as IT, financial services and retail also performed well. However, inflationary pressures and global economic uncertainties pose some risks. Despite these challenges, India's economic fundamentals remain solid, positioning it as one of the fastest growing economies in the world. Coming to the TIC, testing, inspection and certification, and CRO industries we operate in, they saw moderate growth driven by continuing demand for stronger compliance and quality assurance across various sectors, including manufacturing and healthcare. However, economic uncertainties and inflationary pressures have tempered the overall expansion. Talking about the quarter and business highlights, Vimta Labs witnessed very good year-on-year growth of 26.4%. This was primarily led by our pharmaceutical services, which continue to drive our business. Overall, we saw good traction across all our verticals and would like to highlight that our new life sciences facility will be commercialized from third quarter. The clinical trial services had a positive impact on our revenue. This being one of our growth drivers, we are confident that these services will bring in good performance in the years to come. Looking at the food testing services, we witnessed a slack in the business due to certain factors, which we feel would stabilize in the coming quarters. On the electronics and electrical testing, there continues to be new products coming in for testing in our lab, and these services too have performed well for us. We are also in the process of expanding the space for electronics testing at our life sciences facility in Hyderabad. We are adding a new EMI/EMC chamber to further gear up to the market requirements. As per the press release published on August 30th, 2024, Vimta Labs has divested the diagnostics services business to Thyrocare Technologies. This decision allows us to sharpen our focus on our core services and optimize resources for sustained growth, which will result in a significant improvement, as you see, in our financials, which our CFO, Mr. Narahari, will take you through in a bit. Looking ahead, we are optimistic on all the services we offer, and with the growth drivers in place, we are confident that we will achieve our near-term target of 500 crores. With this brief overview, I now hand over the call to Narahari to walk you through the financials. Over to you, Narahari.
Thank you, Ms. Harita. Now I would like to walk you through the consolidated financial performance for the quarter ended 30th September 2024, after which we can open the floor for question and answers. Before I start discussing the financials, I would like to highlight that the previous period figures for P&L items have been regrouped to ensure comparability with the current period. Basis the announcement of sale of diagnostics and pathological services business on 30th August 2024. I'll start with the consolidated financial highlights for the quarter. Total income for quarter 2 FY25 stood at rupees 854 million as compared to rupees 676 million in Q2 of FY24, up by 26.4% YOY. EBITDA stood at rupees 306 million in Q2 FY25 as compared to rupees 194 million in Q2 FY24, up by about 57% on a YOY basis. EBITDA margins for the quarter stood at 35.8%. Earlier, the margins were in the range of 23 to 30%, which has now significantly improved. Profit after tax in Q2 FY25 stood at rupees 170 million as compared to rupees 81 million in Q2 of FY24, a growth of more than 100% on YOY basis. PAT margins for the quarter stood close to 20%. Moving on to half-year performance, revenue from operations for H1 of FY25 stood at rupees 1610 million as compared to 1439 million in H1 FY24. This roughly translates to a growth of 12% on YOY basis. EBITDA stood at rupees 472 million in H1 of FY25 as compared to 572 million in H1 of FY25 as compared to rupees 468 million in H1 of FY24. This translates to EBITDA margins of 35.5%. Profit after tax in H1 FY25 stood at rupees 309 million as compared to rupees 226 million in H1 of FY24. On the balance sheet side, we continue to have net debt-free balance sheet with cash and cash equivalents, including other bank deposits of close to 28 crores. Our total debt stands at 116 million as on 30th September 2024, with a debt-to-equity ratio of 0.03x. Capex for the quarter stood at 30 CR. We continue to maintain our capex guidance of rupees 90 crores for FY24-25. With that, we can now open the floor for Q&A. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question is from the line of Viraj Mehta from Enigma. Please go ahead.
Yeah, hello ma'am, and congratulations for the numbers. Sir, ma'am, my first question is regarding the divestment of diagnostics. I can see the loss that you have mentioned in the quarterly run rate, but in the sense, is it safe to assume that if you take out diagnostic, this very high margin of mid 30 percentage points is more or less sustainable for Vimta? Is it a fair way to think about this?
Yes, as you rightly said, of course, the numbers what you're seeing for diagnostics business, what we had reported, excluding that, the margins are sustainable around 35%.
Okay. And sir, madam mentioned that we are looking at 500 crores in near term, and we have always mentioned we'll be able to do it in FY26. So are we on track to do that?
Yes, we are still on track to do that.
So ma'am, we are in FY25, so FY26, you are saying that we would be at a quarterly run rate of 125 crores from 80 plus crore this quarter. The only reason I'm asking this is because when we mentioned 500 crores, we also had diagnostics in our business. Now that that is gone, do you take out some money, like do you take out 30-40 crores from our ambition, or we are still looking at 500?
Yeah, I think we would have to remove that 9% of the pie that diagnostics was occupying. But having said that, I'm pretty confident that we will hit that run rate during the next financial year.
Okay. And ma'am, as a company, that incremental 40 crore revenue, if you take as in quarterly 40 crore incremental revenue that you talked that we will hit by Q3, Q4 of next year, where do you see incrementally a large portion, or where are the higher portion of that incremental revenue you think will come from? Which part of the business is?
The growth will come from all the business units according to the portion of business that they currently contribute to. Like for example, pharmaceutical still remains the dominant business for us. So majority of the growth will come from there in terms of absolute numbers. But our other divisions are also gearing up to deliver a very strong growth in the next few years.
Right, ma'am. And ma'am, my last question is, when we go from 85 crore quarterly revenue, as in basically 27-30 crore monthly revenue to 40 crore kind of monthly revenue, with such high gross margin business, what kind of operating margin or operating leverage do you think will play out in our business? At that revenue, can we be a company of 38-40% margin or even higher?
That is a little tricky to answer in a straightforward manner, because when your top line grows, then the economies of scale hit in. But then after a certain time, you would need fresh capacities to be added. So it will kind of go in a slightly wave fashion. So I won't be able to accurately answer that. But the margins that you're seeing now are sustainable.
Yeah, I'll just add on to that. The reason why we are not commenting on a higher EBITDA margins is that, because we are having addition of capacity, which is going to commence from quarter 3, and it would take a little more time for us to fully occupy. So till then, we would be very happy to maintain margins around the current levels, and once we reach a critical volume of 450 crores around, probably that point in time we'll have to relook if we can have higher margins or not. But as such, the industry we are way above the industry average margins currently. So yeah.
Sure. Thank you so much. And then last, just wanted your comment on our food initiative for the government. What is the monthly run rate there? I mean, we have been much slower than our anticipation when we put it up. So has there been any improvement there, and what is our future for that?
Yeah, there is a betterment of revenues there, but I would still say it is significantly lower than what we had anticipated. But it has kind of stabilized where it is for now. So we don't have any forecasting on that side of revenues.
Sure, ma'am. Thank you and best of luck.
Thank you.
Thank you. Before we take our next question, we would like to remind participants that you may press star and one to ask a question. Our next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a great set of numbers. So my first question was on, if we look at our performance, as you had said in your initial commentary, that food continues to remain a bit sluggish. So the top line growth, if we remove the diagnostic business performance in last year's performance, is primarily driven by pharma, is what we can infer, because the rest of the segments are pretty small to make much of a dent on our overall numbers.
Yes. What is the question?
So is the growth that we are seeing, or the run rate of around 85 crore that we have seen in this quarter, the growth is largely driven by the pharma?
Yes. It is largely driven by pharma, and you're right. The other segments, except for food, are too small to have a significant impact on the absolute numbers. And food also is mostly due to internal reasons. We are shifting from the existing facility to the new facility that we have built in life sciences. So there is inevitably a little slowdown in operations. And since this is a retail kind of business, there is a little impact on that side of the business.
Sure. And sir, if you can talk about this the Biosecure Act and how it is going to impact us. Are we seeing increased inquiries over the past few months and increased traction with our existing and new clients?
Yeah, there is a positive impact of that regulation in US that we see here. Some big corporations, MNCs, have reached out to us to see if there could be possible partnerships, but these are all still in very early explorative stages. We think that the momentum could pick up in the upcoming quarters or maybe a year or so.
Sure. So ma'am, this 85 crore run rate is now become like, normally we have seen that because of some capacity constraints we were facing some challenges on the growth. Plus there was some slowdown in the US pharma segment. So now, given how things are looking at the new additional capacity coming in our life sciences campus, 85 crore run rate is a new base now from where we can see a growth hopefully over the next few quarters?
Yes.
Okay. Thank you and wish you all the best.
Thank you.
Thank you. Our next question is from the line of Ankit Pandya from InCred ANC. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on the great set of numbers. Ma'am, just two questions. So, firstly, on the top line growth, so we have seen top line growth driven by the overall pharma segment. So, can you give more, can you throw some light on what has worked for us during the quarter and, just directionally over the next few quarters and 1-2 years, how are you looking at the pharma sector? And secondly, you mentioned in the opening call that there's some challenges were faced in the food segment. So if you can highlight if possible to highlight what were the challenges that we faced in the food segment.
Sure. In the pharmaceutical services, we have preclinical services, we have clinical research services, and also analytical services. So in this quarter, all three of them have picked up on the revenue side. Clinical research especially got a boost because of the clinical trials that we started. And on the analytical side also, the investments that we have made on the biopharma side are slowly starting to be, we are starting to see returns on those investments. And preclinical also has shown growth during the quarter. So all three segments have helped push the pharmaceutical revenues quite well. And on the food side, I was explaining earlier, it's mostly internal reasons. One of our labs that we had in Pune, we shifted to Nashik. So there was a temporary gap there still is a little bit of temporary gap of revenues from that lab location. And here also in the Hyderabad headquarters lab, we are shifting the food testing services from our existing life sciences building to the new building that we have built. So it's in transition phase. So during transition, the equipments have to be shut down and they have to be reinstalled at the new location. So they have to be validated again. So we are trying to do this very, very slowly, but it does have a little impact on the operational capacities, day-to-day capacities. So therefore, the factors are more internal than external on the food business.
So, ma'am, on the food side, will it be right to say that, was there a loss of business that can, or transfer to the next quarter or something like that on those lines? Will be that right way to look at it?
As of now, I won't say there is a loss, but even if it was there, it could be a temporary transfer because it's like a retail business. Now, if we are not available to give the report in 3 days, then of course they will have to look for that testing service somewhere else. So that little chance, that little risk is there, but we have good relationships, especially with our large customers. So there shouldn't be a long-term impact of this.
Okay. And on the pharma side, we bring on clinical, preclinical. So clinical that we have recently started. So again, I think the momentum that will be one of the key sort of the bump up in the revenue going forward that we can see on the quarterly basis.
We have actually just begun the first trial. The first trial is going very well. So more projects have to be added and the efforts are on. The first few ones may not come one after the other in a very successive manner. There might be some gaps, but it will pick up.
Okay. And one last question on bookkeeping. So in the balance sheet, in the other financial liabilities, there is an increase from 24 crores to 45 crores. So anything to read in those numbers?
Can you refer to the exact line item? Other financial liabilities. So this is because of capex expenditure. So there are certain capex related vendors which were due payment, which were not due payment, but which were accrued as a payment liability. So that was the exact reason.
Okay, that's it from my side. Thank you.
Thank you. Our next question is from line of Milan Shah from Urmil Research Consultancy. Please go ahead.
Hello.
Hello, Mr. Milan.
Hi.
Yes, sir, your line is unmuted. Please go ahead with your question.
Okay. Congratulations for a great set of numbers. And madam, in opening notes, sir has said that presentation is uploaded on Exchange and website, but there is no any presentation on the site or BSC Exchange. So look into matter because of investors are going through and then after they're going to ask the question. So my request to, and second question is what is the export of the business contained in this further result?
Can you please come again with the question?
What is the content of export in current quarter business and a half year?
So typically our export is in the range of 25 to 30%. So this year there is no this quarter also there is no exception to that general percentage.
Okay, and after third quarter our expansion is on road, then it is a chance to increase the export revenue?
It has no direct connection between expansion and export revenue.
Okay.
So the typical trend has been around those numbers. It's our continuous endeavor to increase those numbers. Fortunately for us, India's market is also very strong. So we are able to drive good growth in both domestically and internationally.
Okay. And electrical and electronic side, we are going to expansion in big way or this is slowly we are going to add it?
We have created a space to add one more EMI/EMC chamber. The chamber also is ordered, but it has a long lead time. So we expect the installation of the new chamber to be done maybe around Q4 or early next year.
Okay, thank you and good luck for next year.
Sir, as we speak, I just cross-verified on the investor presentation. It got uploaded. Could you please recheck and have a look at it?
So the line for Mr. Millen dropped.
Okay.
Thank you for your answer. Our next question is from line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello.
Yes, Mr. Vignesh. Please go ahead with the question. Yeah.
Sir, actually, I think I missed the initial part of the call. So, as per the understanding, we are targeting to do 500 crores next year. Is that correct?
Yes, we want to at least reach the run rate of 500 crores in next year.
Sure. And ma'am, the new facility, should we expect the margins to be in the similar level in the pharma and the food segment at an overall level?
EBITDA margins, yes.
Yeah. Okay. Okay, ma'am. That's it. Thank you.
Thank you. A reminder to the participants that you may press star and 1 to ask a question. Our next question is from line of Zaki Nasser, who's an individual investor. Please go ahead.
Hello.
Yes, sir. Please go ahead with your question.
Yes. Ma'am, congratulations to you and your team on the phenomenal set of numbers, ma'am. I would want you to throw some light on this electronic testing facility which one is on and you have ordered for another one. How do you foresee this panning out over the next 2 to 3 years, ma'am? Thank you.
The defense sector, I think, is getting a very good push in our country, and we are sitting in the hub of defense component manufacturers. So the variety of systems that are coming to us for testing is actually adding month on month. So we are quite upbeat about it. Already our capacities have been utilized around 80 to 85% so far. So we are just gearing up for additional capacities because these have very long lead times. The chamber takes a long time to, once you place an order, it takes a long time for it to be delivered and installed. Therefore, we are proactively creating additional capacities which should help us continue the growth even in the next years without any pause or slowdown in revenues.
Ma'am, bookkeeping question, ma'am. The revenues in the current quarter, would that exclude the division you sold to Thyrocare, ma'am?
Yes, sir. So the numbers reported are excluding of our diagnostics business. So the top line, what we are mentioning of close to 85 CR, this doesn't include diagnostics business for the quarter.
Thank you. Thank you. And best wishes to you for the 500 crore figure, ma'am. Thank you.
Thank you.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 at this time. Participants who wish to ask a question may press star and 1 at this time. Our next question is a follow-up question from line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. Can you talk about how the NFL lab is doing at JNPT and any positive developments there?
The sample loads at NFL have slightly bettered, and after that they are stabilized now. So there is no forecast, like I said earlier, on whether it would go up further more. So as of now, it is better than what it was a couple of quarters before.
So how much growth will that be, let's say, compared to a couple of quarters? Like will it be a significant growth that you say?
Yeah, that would probably be around 30 to 40% increase in sample volume.
Okay.
And ballpark.
Okay, and let's say how far are we from the numbers that we were expecting 2-3 years back when we started this lab?
As of now, we are probably still 30-40% away from what our expectation was.
Okay. And in terms of, margins, we have seen improvement given the volume uptick that we have seen there.
Yes.
So the margin is a combination of economies of scale as well as exclusion of diagnostics business.
I think he was asking about NFL.
Mm-hmm. Okay.
All right.
Okay. Thank you, Vishal.
Thank you. Our next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi. Congratulations for very good set of numbers, ma'am. Just one question. I think you alluded to, some conversations that you are having, with some of the MNC players, as a fallout of Biosecure Act. Now, given that, if some of these contracts materializes as and when, it rectifies, is there a possibility that, we may run out of space, even after expansion because, that expansion, we may have already kind of, tied up the capacity for the existing businesses and the growth for that. So how do you look at that? Is this a single conversation that we are having or are there multiple conversations across, 3 areas on the pharma side that we are having?
No, the relationship that I was talking about has already begun, and typically, as in any relationship, especially with a global company, the ramp up is slow and steady. So that is a phase that we are in. Capacity wise, I am not concerned, at least for the next couple of years. We should be very comfortable in accommodating any requirements that such partners may have. And I also want to clarify that there is no direct correlation with the Biosecure Act and this partnership. So this is not probably directly because of that.
Understood. And sir, madam, you can give some more color on the preclinical side, the scale up and, how you are looking at things, how the pipeline is shaping up, where do we see from here, how can we grow? Some more qualitative insights into that would be helpful.
Pipelines, mainly, 2 segments that we spoke about, right, which are poised to grow in the future. One is the pharma segment and the food segment.
I am asking for preclinical part of it within pharma.
The three segments that are poised for growth and what we are pursuing are the pharma segment, the food segment, and electrical and electronic segment. These are the 3 focus areas for us, and these are the 3 areas where there is a traction globally. So coming to pharma segment, preclinical is a part of the pharma segment, and preclinical is mainly driven, or the major opportunities for preclinical are in the countries where there's a lot of drug innovation going on, which is the Western world, the European markets and the US markets. So we are equally placed in both these markets. A lot of efforts have been put over the last 3-4 years, and we are seeing good returns coming in from there. The clinical business again is there's a lot of business which flows into India from the Western markets. Europe was a market where we were not very strong, but the efforts in the last 2 years have started yielding. We are making partnerships. We are making progress in these markets. So overall, I think the pipelines are growing and the business outlook for the future is also very positive.
Okay. Got that. Thank you and all the best.
Thank you. Our next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, thanks for the opportunity and congratulations on an excellent set of numbers. Just 2-3 questions. So one is on the partnership that you were earlier talking about. Are you starting to see, aside from that, are you starting to see any conversations which are pertaining directly to the Biosecure Act in the US?
So the partnership we have been talking about is with one of the major US innovator company, and this partnership is not necessarily, as on today, directly hinting at the biosecurity, but it is mainly on the cost-cutting measures taken by MNCs year on year, where they are looking to find markets where they can offshore or send out some of the work which takes up a lot of resources. So in our initial talks, the initial discussions and the initial work which is coming in is directly related to that, and that is going to continue. The Biosecurity Act is still, I think, it is still yet to show much of an impact, but I'm pretty sure it's going to gradually shape up that way.
Thank you for your answer, sir. The line for the participant seems to have disconnected. A reminder to the participants that you may press star and 1 to ask a question. The line for the previous participant has reconnected. Mr. Rajesh, please go ahead with your question.
Yeah, thanks. Sorry for that. So what I was trying to understand, and I'm not sure if you already answered, that if you put that partnership aside, which you were saying is more related to cost cutting, are there any other conversations which are a direct result of Biosecure Act? That's what I was trying to understand.
As on today, we don't see that in the market where companies are coming to India, but I think eventually it's going to happen. There are discussions of moving those manufacturing facilities out of China, and I think there are some active discussions happening in the country with some of the major players. I think we will have more concrete understanding of that by, I think, the first quarter of next year.
Understood. And my next question is, and I know ma'am doesn't like to talk about this, but directionally, can we assume that 70% of the revenue in this quarter was from pharma?
Yes.
Yeah, close to that, yes.
Okay, great. And then lastly, on the guidance for next year, I heard two numbers. I heard 450 because you are taking the diagnostic out. And I also heard you say the run rate of 125 crores in a quarter. So should I conclude that, maybe in Q3, Q4 next year, you are targeting to hit 125 crores of the run rate revenue? Is that the way to understand your comments?
Yeah, that's the right understanding.
Okay. All right. Great. And all the best. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Vishal Manchanda from Systematics Institutional Equities. Please go ahead.
Good afternoon, and thanks for the opportunity. I have a question on the biosimilar business that you're trying to build. So would you be able to provide any color whether you have been able to win any contract there in terms of executing a trial or maybe the basic bioanalytical test in that line of the business?
Yes, we have been doing pretty well in this segment of biosimilars and some of the other big molecule, large molecule areas. This is an ongoing work. We have been doing it for quite some time on the preclinical space, but now in the analytical and clinical space also, we have contracts which we are executing now.
Okay. So you mean you would be doing a trial for a client on the biosimilar front? You have a contract for that?
We today have, I won't go into much specifics, but yes, we are a part of such contracts. Clinical trial programs, yes.
Okay. And just one more fundamental question on the pharma analytics side. Just wanted to understand the driver of growth for the business. So is it primarily the filings that companies do for their products in the US? To support these filings, they need analytical tests, and Vimta supports these companies on those analytical tests. Is that the driver, or there are other drivers as well for the pharma analytics business?
That is essentially the basic driver for any of the CROs, the outsourcing work to support these filings. But the other part of that same driver is the complex products. So for the general products and all, they have a number of labs available, but for complex and more R&D support kind of work, they rely on CROs of experience or CROs which have been with complex solutions for their complex problems like Vimta. So that is the second part, which is also fueling the growth.
You started to get more complex work related to complex generics now. And
yes, we are supporting a lot of those complex generic studies.
And are these primarily Indian clients or the global innovator clients? How would you
It's a mix of both Indian clients, European, North American, Southeast Asia. But the common factor between all these companies are they are filing in regulated markets, which could be North America, Europe, Japan, and some of the semi-regulated.
Got it. Thank you very much. That's all from my side.
Thank you, Vishal.
Thank you. Next is a follow-up question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, thanks for the follow-up. So I wanted to just inquire about the transition that we were doing from the facility that you guys showed us during the investor day, and obviously the capacity was very tight at that point in time. So if you could just comment about that, how's the transition of going into the new place, et cetera, is going on, and what is sort of the deadline as to when that will get done?
The new facility is created to house food testing services and also to house preclinical services. So food has almost 90%. We have moved food from the existing facility to the new facility. Food also has multiple labs. We have the nutrition testing laboratory, we have the microbiology laboratory, and we have the residue trace analysis laboratory. So nutrition lab is fully migrated. The trace analysis lab is also almost migrated. The last one will be microbiology that we will be moving in this month or maybe till mid of next month. Preclinical, we are yet to start shifting. So that also we will initiate in the month of November, and that will also be very gradual. And the reason we are doing it very gradually is because we do not want to impact our service to the customers.
Got it. And I think you had also talked about putting up a second chamber for the electronics business.
Yes.
So any update on that?
Yeah, so we have placed an order for the chamber. The delivery is expected late Q4 or early Q1.
Okay. And then lastly, on the CapEx side, if you can just update us as to what's the plan for this year, and what are you planning for the following year?
So if we have to divide between the infrastructure addition as well as other than infrastructure, so infrastructure, we may incur close to 70 CR in totality, which we expected to be capitalized during quarter 3, out of which majority was spent last year, and this year also we are spending out of the overall budgeted allocation of 70 CR. Other than that, we can expect an increment between somewhere around 50 CR, 50 to 60 CR, and we already incurred close to 30 CR in the H1.
Got it. Thank you. That's all.
Thank you. Our next question is from line of Milan Shah from Urmil Research Consultancy. Please go ahead.
Hello.
Yeah.
Hello.
Yes, Mr. Milan, go ahead.
I want to know that we are going to in big expansion, so any plan to preferential or fundraising planning for this year or next year?
As of now, we don't have any thought in that direction.
Oh, okay. Thanks.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you, Siddharth. I want to thank all the participants for joining us in the call today and also for all the good wishes that were shared with us. Wish to thank even Vishal and Systematics for hosting this call today. Thank you all. Bye-bye. Good day.
Thank you all.
Thank you. On behalf of Systematics Institutional Equities, that concludes this conference. We thank you for joining us, and you may now disconnect your line.